Coming up in this show, Harvey has a trade idea for you in Las Vegas Sands. Really nice looking analysis in there. Katie has trade planning with options. She's going to look at the industrials, that's XLI, with a bullish option idea. And take a look at our level 3 50% discount non-recurring. This has so much in there, you're going to love this deal. Plus, I'm going to bring you my analysis on the stock market with a little market brief on what went on this week, plus our multiple time frame analysis in the S&P 500, NASDAQ, and Russell, and our market condition monitor, that's the MCM Pro, which is included in the special in level 3, and you're going to love this application. If you want to learn more about askSlim.com, get acquainted. Sign up for our Stock Index Report Lite. This is daily information on the S&P 500 that is free. Go to our free stuff at the top of the site at askSlim.com and sign up. If you're on YouTube, subscribe to the channel, click the notification bell, and do like this video. Give it a thumbs up. On X, follow me at askSlim, and any questions you have on our memberships and our huge offerings of education and analysis for traders and investors, write to Matt at askSlim.com. This is Trade Ideas. Harvey's going to share analysis with you on Las Vegas Sands. This is positive analysis, and you're going to see the amazing multiple time frame analysis that we do and why Harvey sees this as bullish, and that includes targets for where he expects it to go on the upside and what price could be a problem on the downside.
This is an askSlim trade idea video walkthrough for a short-term long in Las Vegas Sands. It is January 30th, 2025. This is Harvey Ramachandran. So let's go ahead and hop into this multi-time frame look here at LVS. All right, so this is our both weekly, daily, and 2-hour cycle analysis here for Las Vegas Sands. On the intermediate term, you can see that there was a trough here that was due 1223 to 310, and we are seeing a move off just below that 61.8 fib at 44.34 post earnings, and we are now seeing a turn back up. Our weekly RS indicator here, which is what we use to help to track the cycle phasing, is still negative, and that does need to confirm to the upside, but we are very likely in a bottoming phase here in LVS. You will note in terms of the cycle structure, there is a higher low basing cycle forming here, and this is all quite constructive over the longer term. If we go ahead and hop over now to the daily time frame, you will see our trade idea right here. We had a trough that was due 117 to 131. We have now turned up post earnings on volume, and what I'm going to be watching for is just for a very modest flag here to then turn right back to the upside and rally into the intermediate term 50 to the 61.8 fib zone here. That is the darker red shaded area from 49.81 to 51.41. On the downside, I'm looking for it to hold right around 46.60 to 45.35. If it loses on a daily basis, the 78.6 at 44.43, that would invalidate the idea. So you can see that the overall risk would be right around 223. We are looking for a move up of around 317 at minimum here on the upside in LVS. What I also like about this is that this is happening on earnings. Please note we have a whole video done on earnings gaps. Slim did that, and he looked at the value of earnings gaps, and you really need to watch that video in our library. Please note we have now over 1,000 videos plus at your disposal. All you have to do is sign up for a level 2 membership or higher at askSlim.com, and there is just a tremendous wealth of knowledge there that we have built up over now almost 10 years here at askSlim.com. So please do check that out. If we go ahead and hop over now to the 2-hour time frame, you will see the bias has clearly shifted to the upside. We have now a bullish RS on the 2-hour and a bullish slim ribbon. So what that says is flags back into that rising ribbon are likely to be opportunities to be looking back to the long side as long as we see these indicators stay positive. So that is the overall setup here across both the weekly, daily, and 2-hour here for LVS. As always, if you have any questions or comments, feel free to send us an email or post it in the comments section below here on YouTube. Thanks again, and I hope you all have a great day.
This is Trade Planning with Options. Katie shares analysis in the industrials. She shows you a bullish option trade idea, and you're going to learn the language and style of cyclical analysis, as she does a great job and is really an expert in this and option trading. And she's going to show you how to open up a Tasty Trade account through askSlim.com, and it helps us also. So please do open up a Tasty Trade account through askSlim.
Hi, this is Katie with askSlim. This is a Trade Planning with Options video on January 30th, 2025. We are going to look at an options trade idea in the Spider Industrials ETF. The ticker symbol is XLI. First, we have our legal disclaimer. The options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm simply educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email matt@askslim.com. This is the weekly chart of XLI. On the bottom, we have cycle brackets that demonstrate an average cycle length of 32 bars. And we believe that we formed this prior cycle trough here just 2 weeks ago. And we got down into about the middle of the support zone there. We have an upturn in momentum here with our reversal scout having turned green, and that helps us to confirm the intermediate trough. Now we do have some projections up here. We have an area from the prior cycle peak up to the 61.8% extension, and we don't have another cycle trough due until the autumn. Now we're going to switch over to the daily chart. Here's the daily chart of XLI. On the bottom here, we have a 42-bar average cycle length, and we formed this daily cycle trough that was in sync with the weekly cycle trough back here. Moved up sharply to the 78.6% fib of the move from here to here, and then we retraced down to the top of the support zone. If you see down here on the slim ribbon PO, if we get a slightly higher move, then that will give us a momentum continuation to the upside signal. We do have positive momentum here. Here's our reversal scout. It is green, and our slim ribbon is also green. In terms of some of the other askSlim tools, here is our option bias indicator. It's sitting at a P3, indicating that we should position our options trades to the long side. Over here on the MCI, we've got a 52, so it came up through the swing zone successfully, and we would expect it to continue to move higher if XLI moves higher. Here I've also put XLI into the askSlim Slimulator ranking system. As you can see, very bullish. And here is the askSlim momentum tracker, also very bullish across all time frames. So we are going to go over to Tasty Trade. They are our preferred options trading platform. We're going to set up a bullish trade. If you're interested in Tasty Trade, you can go to the askSlim homepage, hover over Partners, and click on Tasty Trade, and that will take you to a page where you can learn more about them. And if you choose to open an account with them through our link here, that will help you, and it also helps us. So please do consider checking that out. Here is XLI loaded into Tasty Trade. The first thing to notice is that for an ETF, the IV rank is relatively high, 45.4. That would imply a short premium strategy. I am going to demonstrate that. And if you chose to do a long premium strategy, a decrease in the implied volatility will hurt your trade, but if you are correct directionally, you'll be okay. Let's open up this March 21st expiration cycle with 50 days to go. We are bullish. And with short premium, that means that we are going to use puts. We are just going to do the simple sale of a put, so a short put. And let's go right to that 135. That's right around the 30 delta. And let's just sell the 135 put. That nets us a credit of $1.34 per put that we sell. Our probability of profit is 76%. We pick up 28 and change in long deltas and a daily theta of about $2 $13.50. Now, this does use quite a bit of buying power in my account. Almost $2,400 to place this trade. If you want to cut that down, you can buy a further out of the money put to define your risk. Here's a risk graph of the sale of the put, and as you can see, it has no risk whatsoever to the upside. I will put that trade idea in the options trade idea tracker, and we will do a follow-up video on it again next week and see how we are doing. As always, you can reach me on Discord or via email to katie@askSlim.com.
This is stock market analysis by me. We're going to take a look at the S&P 500. But first, look at this important information. Make sure you read this slide because this talks about our approach to analysis and you using our information and the important aspect of trade ownership. So please do take a look at this slide. This is our level 3 trial, 50% off. It's only $59.50 for 1 month, and it's non-recurring. So you will not get billed again, though at the end of the month we're going to send you another special if you want to sign up for more. What you're going to get is our futures, equities, and ETF hubs. You're going to get our stock index report daily snapshot with information on the 3 major indexes. You'll get multiple time frame askSlim chart streams. This is live broadcast that shows you the index in gold and silver and bonds and the energy. It's an unbelievably great way to see our proprietary indicators at work live all day long. You'll get our trade ideas, which includes our option ideas. You're going to get Future Speak. This is a show that comes out every Wednesday, and Arby does a fantastic job on it, looking at 24 different markets with short and intermediate term outlooks. You're going to get also Arby's office hours and with all the videos and charts, plus our full library of over 1,000 videos. You'll get our Slimulator Bull Bear ranking system, Slimulator Momentum Tracker. These are fantastic applications, and the Market Condition Monitor, which I'm going to show you live in just a couple of minutes if you're watching this show. And also, you're going to get our cycle load timing tracker. Katie does a fantastic job with that, plus everything that's in levels 1, 2, and 3. This is the best offer ever from us. This is an incredible deal with everything that you're going to see in here. Just $59.50, non-recurring, asking you to go to askSlim.com to the top of the page and sign up. Yes, that's a picture of me on the trading floor with my hands up right over there, 1974 at the original CBOE trading floor. And here I am in the 1980s doing my cycle charts on paper. Did only about 30 symbols at that time because it was a lot of work doing it by hand. And yes, 50 years is how long I have been at that, starting in 1974. So go here to the top of the askSlim.com page where you see special offer. Save 50% on level 3. Again, that's non-recurring, just $59.50 for everything I just showed you. Before we get into the charts, let's take a look briefly at what happened last week in the market. Well, indexes are mixed. The Dow had a sizable gain, a couple percent, but the S&P 500, NASDAQ, and the Russell are a little changed, kind of on both sides of unchanged. The big news early in the week was on DeepSeek, which is an application that came out that on a very, very small amount of money apparently has duplicated the results of what the big AI companies have done. And Alibaba came out with big news also, and that they say that their AI program is even better than DeepSeek. I've tried DeepSeek. Well, of course, millions have, and it does seem absolutely fantastic. The question is, are we seeing now process commoditization? I believe that AI would get commoditized quickly, and in this case, it's not really the chips, it is the process. Or are they piggybacking on present technology and doing things that are illegal? That's yet to be seen, and that's going to be really important. In the meantime, NVIDIA got slammed on that news and really has not been able to recover. And we see other semiconductor stocks in a lot of problems when we look at the analysis on those charts. Fed came out, they held rates. That was pretty much what was expected, but their statement was more hawkish, and they removed the statement that says that they were making progress towards their target of 2% inflation. I think the 2% inflation target is stupid. And what's wrong with 1% inflation? Or what's wrong with us paying less money for things? So I think it's all ridiculous, and the Fed has done nothing but cause damage for over 100 years. So, I've been anti-Fed all along. Gold, well, they went to the new highs. A part of this is on the UK delay on supplying gold when there's been demand for it. It should be just a matter of days, and they're taking 4 to 8 weeks to supply gold to people that have requested such, and so their gold price is going to a new high. We've been super bullish on gold. We thought it was going to be more in a corrective period, but with some upside targets now up around 29.30, I think it could get there. Silver, that pattern really improved, and that comes alive, and you could see that analysis on YouTube right now. RV has just posted that up there from our Future Speak show, which is done on Wednesday. So if you go to YouTube, you could see our analysis on the silver market. Big earnings, they're mixed, as we've seen a lot of moves in both directions. And we saw today Apple move up pretty significantly into the 247s. That was up like 4%, but it's now come off from those highs, giving up about $5 of those gains. And I have Apple in a very negative pattern, and I'm going to be very surprised if we don't see it fall into the 220s rather soon. So it's now trading at 242.50 as I do this show early on Friday morning. And I think it's going to give a lot of ground. Like I said, the NVIDIA pattern is really ugly, and I have a target of down to 112, down to possibly 101 in NVIDIA. So to get that analysis on that, you really need to be an askSlim member. And the big question coming February 1st, so this could be news that comes out on for the market trading on Sunday night, Monday morning, is, are the tariffs coming? Is the president really going to do what he's threatened, which the latest threat has been 25% tariffs on our two neighbors, Canada and Mexico, and huge trade partners, and we've got big trade deficits with them. So he's going after that, and fentanyl coming into this country. Is he lobbing empty grenades? That's the question. So we don't really know. We don't know if this is really going to happen. The stock market is acting like it doesn't care or it doesn't believe that anything is going to happen because we see the stock market now here on Friday morning trading up at its highs. And I'll show you the charts in just a few seconds. So that's kind of briefly what happened in the last week and what possibly could happen looking forward on this weekend. I want to move over right now as we look into the analysis. Let's start by looking at our market condition monitor, MCM, and you're going to love this application as I bring it to you. And here is the market condition monitor. So what we're looking at is our application that has our built-in algorithms in here. And I have this set on intermediate. This is the analysis that is set up for, let's say, 3 to 8 weeks. And the indexes have been bullish in here all along. You can see in here that about a week ago or 10 days ago, we had upticks from in the S&P 500 from bullish to very bullish, from neutral to slightly bullish in the QQQ, the IWM, the same thing, neutral to slightly bullish, and the DIA up to very bullish. And of course, the DIA has been the one that has been performing the best. That's looking at the intermediate patterns. Let's take a look now as we take a look at shorter term patterns in here. And each time I step down in duration, or for trader style to a short-term style here, which let's just call it for 3 to 8 days, maybe even longer than that. Then we can see the changes in here. You can see yesterday there were upticks, and you see the up arrow that helps you know the date and when this uptick came. So yesterday it was giving us indications of the IWM going from slightly bullish to bullish, same thing for QQQ, and then the DIA and SPY going to very bullish. So this is what they've looked like in here, and still giving positive readings. When I look at the charts, I'm more skeptical because I think that we've been in a long, wide distribution period with resistances not far above, but still the indicators are clearly bullish, and I'll show you that as we move into the charts. Let's take a look at the near term. Now, this is if you're just a holder of a few days. And really a short-term trader where the intraday information is very important. And you can see in here that yesterday the IWM and diamonds, they turned neutral from slightly bullish. So they're showing some action that could be more negative. And if you are using our day trader cockpit with our special intraday information on there, then you will see that right now those are negative today. So while the stock market has been moving up, both the IWM and the Dow are negative. Yesterday we had massively positive breadth. Today we have a little bit of negative breadth going on in the market. So this is the near term. Let's go back to the short term right over here. And let's take a look at which stocks, which indexes are more bullish and which ones are more negative. So I'm going to go here, see where it says trade setup condition in the short term. So if you're a trader that looks at the short term, then we're going to look at the trade setup conditions right here. And you can see the ones that are bullish or very bullish. So let's just scroll down in here. And by the way, this change log shows you in the short-term category as these things are changing in here. And you can see on the 31st, Tesla ticked up to neutral from negative. Soybeans ticked down from very bullish to bullish. And XLI, the industrials, have now ticked up to bullish. And you're going to see a very great analysis if you go and watch Katie's analysis in this show, earlier in the show. You'll see that. So let's scroll down in here and see which of these are very bullish. Of course, this is the jets. This is the airlines right there. And the utilities, very bullish. Italy, the diamonds, PayPal, SPY, those are all, of course, very bullish in this category. Keep scrolling down in here and see which ones are still very bullish when you look at that. And you can see as we come down which ones are there. Of course, we did analysis recently on the mid-cap stocks. That's MDY, showing that they were positive, and we see still very bullish. So there's a lot of things that are very bullish in here. Of course, GLD, the gold market, as it moves up to new highs. FEZ, we're getting a lot of upside movement, very much more positive conditions. That's the 50 largest European stocks, and you can see that. And these are the ones that are very bullish. Even the junior miners are now turning up. And they have really struggled to get anything going on the upside. So I'm still scrolling down to see which ones are very bullish. Silver has now turned very bullish. Of course, we've been bullish on corn. Pan American Silver, and of course the banks have been very bullish. As you could see, Goldman Sachs and JP Morgan and Morgan Stanley and XLF, all of those have been signaling these very bullish conditions that you can see in there. Visa, FXI, all of these, lots of things that are very bullish, and Meta, of course, and that ends the ones that are very bullish. This is a fantastic application. It really gives you an idea of how to bias your positions, or if you happen to be in these positions and you want to know when you're getting some warnings, then you can get some warnings in here as things start to change. Let's look at the ones that are negative. Yes, there is not much in here that's very bearish. In fact, there's only one of the stocks that are in this universe of about 140 different symbols. These are the widely held and actively traded in there. And then you could see the ones in here that are bearish. Of course, Federal Express and UPS got absolutely slammed this week in this category. And let's just scroll down a little more so you could see the ones that are bearish in here. So a good look at the ones that are bearish moving down in here, of course. SMH, the semiconductor stocks, I commented on that. These stocks are looking bearish to me. And I think if there's anything going to lead a downside reversal in the stock market, it is in that category. And you can see how the techs are showing up in that category also. So that means that in order for the stock market to keep going to the upside right now, it's going to need to really get a breadth expansion and a good rotation. It is getting that in these last couple of days, so that could be good for the stock market. So that's a look at the short-term trade setup conditions in these widely held and indexes that I think is very, very valuable information. I can just go back here and one more time take a look at the SPY and the QQQ and the IWM and the diamonds. You could see that in there. Right underneath there is Apple, and you could see that Apple 2 days ago went from neutral to slightly bullish, as it did put on this upside move. Again, it's slightly bullish now. I would not be surprised to see that turn negative, as the patterns are not great in Apple. So that's a look at what our algorithms are saying as we look at this. And these are momentum conditions that we look at in multiple time frames. And it's very helpful. This application is available with our special that I showed earlier in the show, which is our level 3 special for 1 month non-recurring for $59.50. So I think it's really worth it to sign up for that. And get a good feel for what is going on in the market. So let's take a look as we switch now over to the charts. And let me just switch to the charts, get rid of that, and go over to the S&P 500. So, whoops. Let me just move that over properly. I had to restart the computer. This stuff got all out of alignment. Let me just get it back right now. And we're going to go to SPX. So this is the S&P 500, and what I'm showing you is a multiple time frame grid with our proprietary indicators on there. This is the S&P 500 weekly, daily, and the 2-hour chart, using our indicators, our proprietary indicators, to help us understand the momentum conditions of the stock market. So looking at the weekly chart in here, we could see that there was, if you look on the bottom, if you're brand new, these are cycle brackets. These just are a drawing tool, and they help us understand what the money flows are in the market, the rhythms that are in the market. And you can see in here there was a minor cycle there that bottomed just a little bit on the early side and then began to move up. This is our reversal scout, and that's a level 4 indicator. And here's where momentum turned down right over here as the market went into this corrective phase, but now has turned into positive momentum here. And the gap that we saw earlier in the week, based on the DeepSeek news, now has been just about closed. And the market, looking at the weekly chart, is still looking in decent shape. So we have resistances and targets up right around here, 61, 80, 61, actually 75. This is around 62.08. This is the area that I put in as the area that I thought was very possibly going to be the high for the year. So the market has moved up into there. It is in this extension zone right there. And again, 61.75, in my opinion, is a possibility. And I think if it got there, that would have trouble moving up beyond there. There are a lot of analysts that are talking for 6,500, 7,000 on the S&P 500 this year. I have strong doubts about that. Let's take a look at the daily chart right in here. Now, this daily chart, this is an island right over there. Now, you can see it's come up in here and closed that gap. But islands are very important. They often give you a good sense for where there are important levels. You can actually see that right in here, as I'm just going to grab this and duplicate it, and I'm going to make it green because this area right over here it was an island that made that bottom right there, as you could see. And an island is formed by a gap down and then a gap up from it. So you had that island forming there, and it did make that bottom. So that right now, as you can see in our momentum conditions, is that the market is moving up with the slim ribbon positive right in here, and the slim ribbon PO on the bottom positive right in here. If it got down a little more, that would have given you a green arrow. So it was actually too strong to get down there and give us that signal that we like to get right over there. And we're up in here getting back into these resistance areas. Now, you can see in here that I have this eking out a new high on this upper projection right over here. It really could get up to here. That's that 61.75, 61.80 level. And this dashed line is the mid cap. And what that is, the cycle in there that we're using as a guide, because that really has been very valuable as far as looking at the stock market. So we have in here this showing you down here, that's our option bias indicator, which is green and showing that, were you to want to be trading the stock market options, that you would want to be biasing on the long side. Here's where it turned negative and said bias on the short side, and you could see how that was right through this period. Took a little while to turn neutral right over here and positive right there. So this has been accurate. We have the reversal scout in here turning up. So all of this is showing positive momentum on the daily, just as it's showing here on the weekly. So all of that is suggesting that the market buyers are still there, and we do see that as the momentum conditions stay strong. Now, again, this island to me is important right there, and even though it closed the gap, it's still an important level. And when I look at some of these other charts, and I'm going to show you what I'm talking about as we look at something like the SMH. I'm just going to switch that over right over here. This is SMH, and this has had a breakdown, and this points down into mid-February. To continue on the downside. You could see the island right in there, and then the breakdown looking at SMH. Apple, which I talked about, which had this big gain this morning. Let me just get this up. You can see that this points to a corrective period down towards late February as it fails in the resistance area right there. So NVIDIA is another one, NVDA, and this is a very bad breakdown, and this points into the mid-February area. Why am I showing you this? Because I just talked about the fact that the stock market, I thought, was going to have trouble in this resistance area. And when you look at the minor cycle right over here, it comes down to the same place. That's why I have this lower projection right over here pointing to taking out that gap downside low right there coming into mid-February. So I think the stock market certainly is strong, and I don't really want to do anything bearish until I start to get some negative readings in there. And the negative readings will first come in the 2 hour. Let's take a look at the 2 hour chart right over here, and you can see that this actually did turn down right there on this break, and it's been showing us negative momentum all the way through here, though the market condition indicator right on here on the bottom has still stayed green, and this only went to neutral when you look at the slim ribbon PO right in here. So we got neutral here and kind of mixed information, and now some strengthening going up again. So until this turns down and negative and gives us a negative signal, we won't believe that the topping here in the daily chart could be coming, and that could be coming really, in my opinion, very soon, any minute, as we get into this area and threaten the high at 61.28. And my gut feel and my analytical sense says to me that if we're going to test that 61.75.80 area right over there, it won't come until after this correction, and then we get this next move up there into this March-April period is what I'm thinking about. But then I'm going back to the weekly chart. There's a potential for a sizable correction into this May-June period also. So I've thought that this early part of this year was going to be very choppy. I still think that's the case, and I think that the market is going to have some risk in here going forward. Let's take a quick look at the NASDAQ and the Russell. And we see here that the NASDAQ in here, which is about unchanged on the week, had that big downside gap based on DeepSeek, and then has come back in here. And again, I think this is a pretty good resistance area there, though we did talk about it getting up here to 22,500. That could happen sometime before there's any sizable decline in here. But again, we'll be looking here, and there you see that gap down and how this just again got up to this gap level. And with the low down over here, I've got a little bit lower potential projection right there, but still you can see this upper projection, which says it could get up to this 21,135 before this really begins to turn down. So we're not sure about where this is going to turn down, because we've got this positive momentum conditions in here in the NASDAQ. But let's get that over this. You see it's positive still here in the market condition in the option bias indicator, and still positive on the market condition indicator here. And again, an upward turn, and we went to neutral and then positive again in the 2-hour chart. So we're getting this improvement that we see in here, and momentum conditions clearly still positive, even though you can see this downward potential move down in here on the daily chart. There's still the potential to get up over here first before it then does turn down. So this doesn't mean that you're going to get that real strong downside move. These are possible tracks for the correction in here, with the NASDAQ being a little bit worse than we see in the S&P 500. Now, Russell is looking, let's just say, a bit weaker as it gets into this resistance area. It could, get some legs and get up here to 2,400 before the correction comes into this November period, or it could begin to weaken, which we're seeing today, some weakening coming in relative to the broader market, and then have the correction down over here. And that low right over there was 2268, so we're talking about 2258 down to maybe 2240 as the potential corrective period in that corrective period into February. So that's a look at the daily chart, and the Russell in here on the weekly chart. You could see on the 2-hour chart also turning back up, and you see this is the strength that you see here, and this upward turn in the market condition indicator. So that's a look at the stock market indexes. Overall, looking strong when you look at our indicators, as the market condition monitor has shown us, with the cycle patterns suggesting that there's still some upside space for it to move and to continue to make higher ground, but then a corrective period that comes out into mid-February for the next low or the next trough, and we'll have to see how steep those, which of the downside tracks they take as the market goes into a corrective period. That is my look at the stock market today. Please do remember to go to askSlim.com, sign up for our stock index report light, and get our free information daily in the S&P 500. Go to YouTube, subscribe to the channel, click the notification bell, and like this video. Give it a thumbs up, and follow us at askSlim on X. Any questions that you might have, write to Matt at askSlim.com. That's it for today. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit